Good day, everybody. Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at SchnellInvestor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. So what I want to talk about today is semiconductors like to lead, and they've actually sparked up quite nicely here. So I want to talk a little bit specifically about that industry and why I'm more excited about the market here. So I'm going to briefly share with you the PLUMB system that we use over at Osprey Strategic and why we think now is the time to get the truck rolling down the road. But the indexes continue to work higher here. They've obviously been running for 7 to 10 days. So if they had a couple of day pullback, would anybody be surprised? So some consolidation, some of these stocks just a little bit of a pullback, and then hopefully another run up. But I'm going to work through some of the breadth clues we've got going here, suggesting a larger bull market, and then general thoughts about that market position. And again, it takes a long time to convert all the people over. If you read the news or listen to the news, we'll never have a bull market again. So we really need to focus on something else. And I would just say that the market is positioned for a big bull run, and then I want to get into the semiconductors directly. So what is the PLUMB system? So the PLUMB system, basically we wait and just sit at the bottom here, and we try to get the timing right for the market to give us a relatively strong buy signal. And when everything starts to thrust, we want to be a part of that move. And so the truck is loaded up and we've started to move, and we're up about 3% on the week, and that was on Friday. So now we're watching to see if we can make any headway. And typically it takes 2 to 3 weeks to really start making a little bit of money. On 4 weeks, really start to see the rates of return huge. So again, we missed the whole downtrend in December where we pulled back, and now we're trying to ride this next wave. So if October was the low, we caught some of the move in November. Out for the move down in December, and now back in for the move up in January. And as that move starts to take place, we want to participate. And so the reason I want to cover off semiconductors is literally if we're at the start of a larger bull market, this is where we would like to get on board. So I think it's a pretty important time for us here in the market, and one of the reasons I wanted to jump in and cover that off today. And if you'd like to know more about that the PLUMB system that we employ over at Osprey Strategic, here's an articles and videos tab on our website, ospreystrategic.org. And when you go in there, investing strategies with Osprey Strategic, and if you just click on that, there's a video in there, and you can go and get an idea of the type of work we do. So, breadth. One of the things that happens during a big bull market is you start to see this broad push. And I'll give you an example. So last week, we had 2,000 stocks up more than 5%. And of those 2,000 stocks, almost 400 were up more than 10% on the week. So huge move. And then on the selling side, we had less than 200 total. And so what you've got is this 10x ratio where the market is blowing all these stocks up and very few are starting to be sold off. And the idea behind that is just understanding that, you know, if a few stocks start to move, and let's just say Apple and Amazon and Google and Microsoft and those kind of group of 10 or whatever, from pushing up the large caps, you can move the indexes. And we could start to see that. But when you're pushing up 2,000 stocks, 5%, that's a big deal. And it's one of the real clues for me that I try to watch for. And it was really interesting in my market newsletter to clients. In October, I said, you know, we have almost 1,000 stocks that moved up 10%, but the indexes were only up less than 1%. And then here we were starting off January with that same scenario with over 1,000 stocks up, more than 5%, and the indexes are only up 1%. And sure enough, the next week followed through with a huge move. And I expect that we're in a big bull market now, and I want to try and explain why that might be. And you can argue with it, and obviously we have to live with our decisions. But for me, I don't want to remain pessimistic when the world is changing. And so it's pretty important for me to try and catch all of the uptrends we can. Let's just say we got 4 or 5 uptrends this year. I want to be part of all of those, but I don't know the severity of the downtrend just based on the mixed backdrop we've got going on around the world. So perhaps I can get in while the market is running up and get out when the market rolls over. And that's kind of what we try to do at Osprey Strategic. So with that PLUMB system, each one of those truck runs, we pick a load up, we take it to the top, and we make bank with it. That's what PLU means, PLUMB, pick load up and make bank. So we've got these systems set up to try and find near the lows, by the acceleration to the highs. And then as the market starts to roll over, we just keep tightening our stops and make sure we're protected. And if the market wants to roll back over again, then we're going to get kicked out. So I think it's pretty important to understand that if we were to be in a volatile, high inflation period, that we'd probably, we might not even go on to new highs, but we're going to keep oscillating around. And so you can make real money if you just ride the swings, but for the buy and hold, you're going to end up, or you could end up, depending on how it works out, that you just end up breaking even all the way through, because what you had, you lost, you gained, you lost, you gained. And so that's what makes investing harder. And we have always had, or in the last 10 years, we've always had the Fed have our back. And the difference is the Fed doesn't come in to help us make the lows anymore. Okay, so here's the advanced decline line for the NASDAQ, clearly breaking out here, even though price has not broken the bigger downtrend. So I like this. This is a nice move. And this positive window here is the strongest window on the screen, going all the way back into April. You can just see the number of stocks being bought and the number of stocks advancing versus declining. Totally changed versus anything else we've seen. Whoops. For the high-low data, you can see here's the trend line for the NASDAQ composite. And again, this is the large group. This isn't just the NASDAQ 100. But look here, the 2-week moving average of the high-low data, we had one little spiky move right in August, and then we rolled over from there. We've got that move now, but here's the difference is since the beginning of the year, we have spent the entire year above zero in terms of more highs than lows. So what it does is says we had 30 new highs and 2 new lows. So our NAD is 28. It would put 28 on here. Well, we had 113. So that's pretty big. And then when we look at this, again, you can see in a bull market, we're above zero for the most time. We can dip below. But in a bear market, we just stayed below all the time. And the other thing to notice is that this got better. Our moving average of kind of grouping them together, each pull down, we have less and less stocks participating, making new lows. So when I look at the advanced decline line for the New York Stock Exchange, we see a big push here on the 2-week moving average to heights we haven't seen for a year and a half. So really, really big. And obviously I could draw in an advanced decline line here, and it's breaking. We're making a higher low. Got a head and shoulders base on the actual New York composite. When that starts to push up through the top side, that's a pretty exciting place to get on board. So maybe we wobble here and it takes a week or two, but the idea is the strong stocks will start to move. And it's not quite as obvious, but it's still obvious that we have a very strong period going on here. That August period was okay. We had a little bit more red showing up than we currently have. But this is a really strong rally here that we want to take part in. And when I look at the high-low data for the New York Stock Exchange, this has actually pushed up to the highest level going back since November. And it's that big push. That's what we were waiting for. I've put this blue line at 100. And typically when we get above there, it's telling us there's a real trend change. Now back in 2020, when everything kind of bottomed out, you can imagine we didn't have a lot of stocks making new highs right away. So it takes a while for that engine to get going. Well, they started in July. So 3 months later, we're actually up to that level. And maybe if you think about the October low, and now we've made a higher low, perhaps we're there. So anyway, we had a big run off July. We are off March, and then we pulled back in early June. And then the market based, and then we went on, and again, we made a series of higher highs. And so that's the idea that we want to kind of watch for. Are we at this second higher low and getting ready to break out? And I do think that's where we're at. Okay, so when we look at the top 1,500 stocks, so rather than a large group of the S&P 500, go to a broader group. And what we see here is this has actually broken the big downtrend for 2022 and has popped to the upside, which is a really nice thing to see. And our advanced decline line here is making a series of higher highs and higher lows now, and we've broken through kind of that horizontal resistance level. Now, again, it could bobble here. Don't get me wrong. There's nothing predicting a market that goes straight up and makes it easy for us. But when we're getting these positive signs, this is a pretty good clue. Now, this one is by Alexander Elder. This is the net new highs minus new lows over a 5-day period. And we have almost 1,000 stocks hitting new highs here, pushing up. And really, you can see in the big bear market of 2022 that just didn't happen. And back here in 2008, we kind of got up to 500 or 600, but we never got up to 1,000. The 1,000 is the white line here. So we never got anywhere near that. And again, could we rock down here? Yes, we could. But I think we've already put in these significant lows like we did in 2008. So it's one of the reasons I'm turning more bullish. And again, I'm using the data, not the news, to try and help me do that. So on the Canadian market, and it's just one thing that I want to show here, is it's really been taken off to the upside here. It's been very strong. And one of the top areas has been the materials area, so both gold and industrial metals. And really, that's kind of been perking up since China started to talk about changing their COVID policy. But if we look at the Toronto Stock Exchange, we have the same principle in play. Where during the bear market, it couldn't get above this zero level, and we've been pushing up here, and we're at about 25 or 30. And we saw this back in 2000 that it couldn't get going, and I can unwind the tape to a whole bunch of different ones if you wanted to. But the idea being, when you get in these valleys that it just can't get out of, that's a big deal. But when it starts to change trend, you really need to fight the urge to think the bear market will continue when all of a sudden all these signs are kicking up at once. And that's what I think we have going on now. So 2018, same thing, pulled down, and early in 2019 we started to go, and look what the stock market did from there. So all of these clues are kicking in. Now I have one other set of clues. This McClellan oscillator, I think it's one of the really interesting ones, but it's pinned up near 100 now. In 20 years here, we haven't got up near 100. I think this goes back to 2007, so what is that, 15 or 16 years? But we've only got these high readings a few times. And my main point, actually, I might have it on one of the other charts. My main point is when you get these big high readings, they have typically come off huge lows. And yes, you may rattle around, and you may need, if on this scale, you'd need a magnifying glass to see the difference. But we're breaking out to higher highs here, folks. This is very positive. And I love the big thrusts that we have going on here from history, and they marked great entries into the market. And so I have trouble believing that we're not at one of those good places. And then the other thing is, this obviously peaked out and can pull back, but what it's measuring is how many stocks have real positive push here. And what you see is, as long as we stay above zero, this is a very strong indicator. And in 2009, just to give you an idea, this thing kind of pulled back, soared up, pull back. soared up and then pull back again. And you can see in big waves going higher in the market, work to try and get going here. We've already made our low, now a higher low and a higher high. I feel like we're on our way. So the McClellan oscillators look really good, and the summation indexes are kind of confirming what we want to talk about. Now, the other large group that's really important to me is the percentage of stocks above the 200-day moving average. And again, the reason I want to bring this up is just think literally how many stocks could be above their long-term average and still be a bear market. So in this current case, the S&P 500, just try and shrink it down a little bit, but so going back to 02, first data series we are at 65% here. So this is like a huge number. And at 65%, really 2/3 of the stocks on the S&P 500 are above their long-term moving average. Now, I can look at this data as long as I want, but what you see is when you're up at this green line level, you're typically in a very bullish place. Now, again, we've come off the low, so I like to think we're on one of the roads higher. And there's nothing saying that it'll go straight up like it did in 09. It could chop around like it did in 2019 and be, real work. I think what I'm more focused on is so many stocks are showing this kind of bullish positioning that do you really want to doubt it? So the approach I would take is that I want to be bullish until proven otherwise. Okay. So I think you've got my memo on this. Here's the Toronto Stock Exchange, so whole different country, and it's at 70%. It's all of these markets are breaking out. Europe, England hit a new high. So you're seeing these charts worldwide starting to change. If you're hitting new highs, you're not in a bear market. And I will say for all those people who said they made, it was a new bull market starting back in June, and I'm thinking, wow, that's been horrific because we rode up 20%, and we rode down more than 20% into the October low, and then we rode up in November, and we rode down in December. That's a pretty hard bull start. But anyway, let's just say it's been choppy, rocky, and ugly since then. But what I would really want to interpret from the charts I've just shown you is they're changing behavior meaningfully. We're right near the lows. We made them roughly early January. So I want to be more optimistic here and try to look for things breaking out. And with that, the title of the presentation today was Semiconductors Like to Lead. So if we're breaking out into a new bull market, we want to look for industry groups that are strong. And so semiconductors typically, even though it looks terrible, it typically can be one of the big leaders coming out of the hole, and the stocks can move up fast. And I'll give you an example. The semiconductor index was up 4% the week the NASDAQ was only up 1. Last week, the NASDAQ was up 4.5. The semiconductors were up 6.6. So they have a tendency to outperform. So they're always a nice area to look. So I've ranked them here by scooter ranking, and we can go quickly look at them. I've put them in order already on some of the previous Market Buzz shows. I've shown how to do that. But I have them ranked right here, period of 1 month. What you can see is 21, 25, 21, 34. Like these things have been on fire already. And even though the market's up a couple of percentage points off the lows, these things are firing full on. They've really been taking off to the upside. And so if we just sort it by percent change, 77% up in 1 month from Nano Labs and Poet Technologies, huge moves. Pixelworks, huge moves. So we could sort it on that area, like stocks up the most off the lows. My big thing here is however you sort it, this is a pretty strong showing, and it tells me that there is leadership coming along here. I mean, the indexes are up a couple of percentage points, and some of these are being aggressively bought and pushed higher by investors. So it tells us something's changing. Okay, let's get into just a few of the charts. So I'm just going to flip to chart list view here, and it's going to put them in the order of the strongest scooter ranking. But this Air Test Systems, AEHR, beautiful push here, up breaking above prior highs. Now it might need to relax a little bit here. It's been quite a sudden move. Maybe it pulls back a little and tests the breakout level. It might give you an opportunity to get in. It did in fact start to push up in July, pulled back in September, held up, pulled back in December, took off. It keeps making higher highs and higher lows. That's just great. So if you can find any sort of a pullback and maybe a 60-minute chart to help on an entry, that one's interesting. This Excelis technology took off to the upside. Clear breakout above the prior highs around $80, taken off to 100. Here's Xperi. So this one literally shot up and has done nothing since, but you're getting, we call this a multiple month consolidation, and all of a sudden it would start to break out to new highs. Now, I'd go check and find out what this gap was. Maybe that got bought out and it's about to come off the market. But here's Amcor. This is a pretty nice push up off the October lows, pull back. Really nice push up since the beginning of the year. But again, it already looks extended, so it's not really my first choice. In test, again, this one taking off to the upside. But you get the idea here. These things are making higher highs and higher lows as we are working out of the base. Now, somebody telling me that this is the bull market or the bottom of the bear market, okay, I can live with that. But it went from $6 to $10 to $7 to $11. Like, hardly easy living if you can handle the 30% pullback after the 40% gain, or 80% gain. Cool, I can't. That's just too big a move for me. But these charts are starting to set up nicely. And again, if we're at the beginning of a new bull market, this should work pretty well. Now here's Rambus, sideways for 2 or 3 months. A big breakout here would be pretty nice to see. Allegro Microsystems, same ideas. It's up against resistance, a little pullback, and then maybe a move higher. Poet Technologies, this one I like in particular because it was ugly, and then it based down here for 3 months, shot up, consolidated, and now looks like it wants to start to trend higher. Now, I don't like to buy it after it's had a move of 20% in one day, but if you get an ugly day for it and it comes back, this looks like a stock that obviously somebody loves a lot more, and look at the volume coming in on this thing. So ASML, they make the chips. They make the machines that make the chips. So pretty big move here. Stock looks like it wants to go to the upside. And again, it was below its 200-day moving average, popped up in November, pulled back, bounced off it, and started to take off. Typical technical action that we like to see. Now, this one's kind of just trying to break out of its base here at around $300. Infineon, sitting here at $34. The chart looks okay. Looks like it's ready to make its next surge. It's just been straight up for so many days. You kind of want to give it a 3-day pullback or a 4-day pullback. And then Advanced Semi, this one's consolidated sideways and looks like it wants to break out higher. So really nice looking charts. And here's Lattice Technologies again, run up hard, pull back hard, run up hard. Doesn't make it easy to hold these big wild wobblers, but you've got a left shoulder ahead and a right shoulder. You've got a neckline at around 66. You run up, you pull back and test it, and now take back off to the upside. That is textbook price action. So gotta like that. Here's the same sort of thing happening with the 200-day moving average. These stocks are moving nicely. Now, again, they're sorted by their scooter ranking. So I'm showing you some strong stocks. But if you ever just want to go find, the strongest stocks in a sector or whatever, you would just go into the scan engine, say new, and it's got typist stock and daily as part of it. But just go down here into U.S. sectors. You're going to scroll down, in this case, get to semiconductors, hit add. We don't have to make this very hard. And it's sitting here. And then you just run your scan. It's going to give you a list of all the semiconductor stocks, and you're going to save it into a chart list, and then you can manipulate it and flip it around any way you like. So hopefully I've given you some ideas of why I like semiconductors. Again, I think it's the big move that makes them so interesting here. I want to start to see, I'll just go back to that summary page. Want to start to see if we can find some big names in here that are ready to move up and take off to the upside. So if you have more questions about what we do at Osprey Strategic, again, getting back to what I mentioned earlier, feel free to head over to the website and check out some of the stuff, our PLUMB system, and what made us decide to buy stocks in early January and how they get going. But we have a very low priced offer. Try everything on the site for a whole month for just $7. I don't think you can make it any better than that. And then the Osprey Strategic annual package works out to $860. That $7 does revert to about $79 a month after the original first month. So anyway, go give it a try and see if there's anything there for you. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV YouTube page. Thanks, everybody. Have a good week, a good month, good year. Looks good so far. Thanks. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.